Hey everyone, it's Mark Ferguson with Invest for More, and in today's video I'm talking about how much my property taxes have increased thanks to the recent assessments in Colorado. And this property right here is probably the craziest increase that I had on all of my taxes, and I'll talk about that. I'll show you some of my other properties. Some actually went down, some went up, and there's a huge difference between commercial taxes and residential taxes in Colorado as well that I will talk about. So love the likes, love the comments, love the shares, and love seeing new subscribers. And we'll talk about this property and some others, and I'll add up all of them as far as value increases, tax increases, and all of that here at the end as well. All right. There's that beautiful property. Here is a list of all the property taxes. All right, so I've got my addresses over here that I can see that you can't, with my fancy software that does my screen share. That fancy software also froze on me after I did this video the first time, and that was a little frustrating when I went to edit it, and it had frozen and I have to redo the whole thing, but hopefully that means it'll just be a better video for you. All right, so this is the 2022 value and the 2023 new assessed value. And Colorado assesses properties every 2 years. That means they increase or decrease the value based on what market value is. Although Colorado in the past, at least in my area, tends to value properties quite a bit lower than what market value is. Maybe they're changing that based on some of these values we'll talk about, but in the past, the properties were usually valued honestly quite a bit less than what they're really worth. Now, when they do come in at value, or real close to value, that makes it tricky because compared to what you're used to, you've got a lot higher value in taxes, but it's real hard to challenge it because to challenge taxes, you send in comps and say why their value might be off, but if they usually value it really low and then all of a sudden they're valuing it at market, it's kind of hard to say, well, you didn't value it at market, so it makes it a little tricky, and we'll show you some of that too. So you have the old value, the new value, the difference here in this chart, my taxes last year or this year, and what my taxes will be next year, and the difference here. So I started off with properties that had the lowest increase in taxes or a decrease, as you see here. And this property actually had an increase in property value from $585 to $606. It's a commercial property, a fence company rents it, but the taxes went down $2,400 a year. I'll try to explain why. Commercial is taxed way higher in Colorado because there were some laws passed many, many years ago that kind of restricted how high residential taxes could be. To make up for that, they bumped up commercial taxes way up here, and we'll show you how crazy the difference is. Well, they recently changed the laws that lifted a lot of those restrictions, and I'm guessing that's why some of the commercial taxes have decreased, even though my valuations actually increased a little bit. Now, I actually bought this property using a 1031 exchange and selling my first rental property I ever bought, which was this property, and sold it, exchanged that money into this other property. I think I paid $600,000 for it, but might have had like a $10,000 roof credit or something like that. And here's the newer, bigger 10,000 square foot property I bought. But commercial taxes are crazy high. And this property honestly is worth a lot more than the valuation, but that's a little tricky, like I said, because typically they're valued a lot lower than what they're actually worth. So you can see they're valued at $606,000, and my taxes are going to be $12,900 a year on that property. We'll show you how different that is than residential. All right, here is the next property. This is the one where the church recently moved in and the county gave me some grief and said it wasn't approved because of a previous site plan. We've been working there to try and meet the county's requests and possibly do a new site plan. Who knows how long that process will take. That property also saw an increase, but a decrease in property taxes as well, which is nice, but still $17,500 for property taxes on that property. This is a small shop I bought for like $110,000. Its value went up $2,500. Its taxes went down $800. Nice to see that. This is a small shop I bought that stored a lot of my flip materials. We do a lot of house flips, and I eventually rented it out to someone else. We used a different spot for our flip materials. It went down to $710. It went down $710 in taxes. This is the restaurant that I remodeled and will be selling here. It's for sale right now. I just showed a video on that. Kept it for way too long. I paid $110,000 for it. Its value went up $7,400, but taxes went down $700 a year. So that's nice too. This is a brewery, or no, sorry, that's not a brewery. That is the jiu-jitsu place and another person lives behind that. It's a 2-unit property, has a basement we could finish eventually. Its taxes went up the assessed value went up $45,000, but the taxes dropped $653. Again, kind of nice that's happened, but don't worry, I will make up for it later on. This is one of the compound properties, the commercial property, the compound, which is now where I store my flip materials. The city gave me grief there. We had an auto repair shop there, and they said it wasn't legal. We'd have to do a variance, and they wanted probably $15,000 to $20,000 in work just to get that variance approved for someone who pays $1,600 a month in rent. So I just turned it to a storage place instead. Its taxes went down slightly, but you can see pretty high taxes for that valuation on that property. And then we have half of the crazy haunted 18,000 square foot property that I don't know what I'm doing with. It's actually for sale too, but it's the only property that had its assessed value drop. And it's a crazy weird property, so that makes sense. And its taxes decreased slightly. But again, high taxes for the value because it's a commercial property. Then I have a triplex that we've been working on. I might sell it. I might keep it, not sure. I've had lots of videos on it. Look at its taxes. Its valuation went up $32,781 a year for taxes. That's because not only do taxes vary based on if it's commercial, residential, based on the town. This is a very small town. A lot of times the small towns have lower taxes based on if it's in the county or city limits, based on just so many different factors. And it's very confusing trying to figure them all out. And I'm not going to try and do that in this video. But that went down some too. I paid $290 for that property, I think. And this is a welding shop where it went down slightly. Value increased a little bit. But again, $3,000 in taxes on $160,000 valuation. We'll show you how different that is in residential here. All right, this blank space is Cleveland. I hate that property. I still have it. The tenant owes me $14,000 in rent, is living there for free. We can't evict them. I'm still working with the state of Ohio to somehow register my IRA there. Is a nightmare, but I'll have an update on that soon. So good time to subscribe. I didn't take the time to look at taxes because I didn't want to. All right, this is a flip. We were planning to flip, but we actually rented it for a while as like a rent-to-own thing. We'll see if they don't buy it. That'll be okay. Its value went up $78,000, and that's really close to market value, maybe a little bit low. But it's residential, so its taxes are only $1,900 or almost $2,000 a year. Again, let's compare that up here to this property that was $308,000. Its taxes are $6,300 a year. The difference between commercial and residential is crazy. Over 3 times the tax amount on a property that's worth less, assessed less than this one. So big difference in residential versus commercial. A lot of people asked me to do this video because taxes in Colorado are going up so high who have houses. So I would say, yes, it sucks that your taxes are going up, but be thankful you don't have a commercial property and pay that amount of taxes on them. And there's also other states that pay way higher taxes in Colorado. New Jersey, New York, Illinois, Texas has way higher property taxes. But it's all, the state will get their taxes. Colorado also has income taxes, other higher taxes. So while their property taxes might be lower, don't worry, they make up for it in other ways. All right. This is a single family house I have. Both of those went up about $88,000. Taxes went up $264 a year. Not crazy amount, but they're getting much closer to market value than they used to be. This is the other half of the haunted property. It went up $9,000. Taxes went up a little. Still, a lot of taxes for that property. This is rented by an oil company, an office building that I don't remember how much I paid for that. $290? Is that right? But we did some work on it. Its taxes are $8,500 a year. They do rent it for $4,500 a month, which helps, but still quite a bit of taxes there. Single family house, and those all saw $95,000 to $100,000 increases in property in assessed value, and $300 or so in increased taxes. All of these very close to market value now, which, like I said, was pretty rare in the past. This next one is a triplex I just finished, but it has an illegal 4th unit. It went up to $589,000. I would sell this for $589,000. I will do it. Who wants to buy this for $589,000? I will sell it to them. Went up $107,000. And when they do these assessed values, they usually do them like the middle of the year before. So while we get the assessed valuation now, kind of the almost the middle of the year, middle start of the year, they did the valuation previously. And when they would have done this valuation, I bought this property for $350,000 right around that time period, and it was a pile of junk. And so I don't know where they came up with this value. It just seems crazy. Luckily, it's residential, so it doesn't have crazy high taxes, but that just is one of the very weird ones. It's super high. And this is the property I'm talking about, if you're wondering. And it is all rented right now. We rented it so fast. So that unit's rented for $1,200. That's the illegal one that we haven't done anything yet because we're only allowed to have 3 units there. The house is rented for $1,550. The basement's rented for $800. All rented, so that's cool to see. All right, this is one of the compound houses, and this jumped up $107,000 again to $348. There's no way I could sell that house for that much. That's a crazy value, and luckily it's residential, but still, I don't know where they got that from. Huge jump. This is a 4-unit property. The taxes went up $500 a month. I can't complain there. It's still way under value. That taxes are pretty low for a 4-plex. It brings in $3,200 a month, something like that. This is a vacant lot I still have. I still want to build on it, but it's also for sale. Vacant land is very hard to sell. I've learned that. Its value went at $46,000 and $3,000 a year in taxes because it's zoned commercial. So that's a big tax bill there. This is a brewery that went up $73,000, and that brewery, actually, the owner is ending his lease, but someone else is going to take it over. And I was in that property for the first time today. I own the property next door too, and I've looked inside the windows. I've just never been in it ever, and I've owned it like 2 or 3 years. So it's a neat little building, but it's not very big. Its taxes went up. It's commercial, so they're expensive. This is also the compound, which is a crazy property if you guys haven't seen the compound videos. 3 houses, a commercial property. I paid $410,000 for it. I spent a lot of work on an eviction, fixing up the properties. I think it's probably worth $900,000 maybe now. And I think if I add these all up, the county has it valued at over $1 million now, more than it's worth. And this is one with 2 houses on 1 lot. Jumped $154,000 to $511,000. No way I could sell it for $511,000. Not even close. Again, if anybody wants to buy that for $511,000, please let me know. You know what would be a cool rule is if the county valued the properties at a certain amount, then they had to buy the properties at that price, right? The state of Colorado is trying to change it so that the towns and cities get first right of refusal of buying properties that come up for sale. Well, I think they should have to honor first right of purchasing on their tax valuation so that if they come at a crazy valuation, they have to buy it at that price. I like that rule. I think maybe I'll try and get that implemented somehow because I'm sure that will be easy to do. Okay, moving on. This is the craziest one, the craziest valuation ever. The yellow house I showed you before. It was valued at $276,000 before. Now it's valued at $519,000, an increase of $242,000. My taxes went up $1,000 a year. Like, luckily, that's actually industrial. It's zone industrial. So I don't know if industrial zoning is different than commercial. It's lower than commercial for sure. This property right here. This is the one. I paid $285,000 for it like a year and 4 months ago, something like that. So within a year of them doing the valuation, I paid $285,000 for it. Haven't done hardly any work. We did replace a furnace, maybe a water heater. This house back here is where the tenant moved out recently. We're actually working on this house right now, remodeling it. This has had the same tenants for years and years. This is the same property where I got a warning because they parked a semi in front and the county didn't like that. Again, it's zoned industrial, but that's against their rules. $519,000 is what they're valuing this property at now. I actually had it for sale for $399,000 for a while. I had the tenant in there before and that didn't work out well. Nobody would buy it. So, county, I think you should buy this property from me for $519,000. Sold. I'm willing to do that for you. All right, moving on. The River House. $348,000 was the old valuation. Now it's $562,000. This is on the Big Thompson River. Increase of $213,000. And my taxes are now almost $3,000 a year. Again, it's hard to complain about that because I think I could sell it for way more than that. But it's such big jumps, right? Just gradual jumps would be so much nicer than these huge jumps. And some of these I remodeled and fixed up, but some of them I didn't. It's just like arbitrary how they came up with these huge jumps, and maybe their AI, artificial intelligence, county computer that comes up with these values needs some more work. That's a joke. I don't think they have artificial intelligence. I'm gonna just stop right there. Okay, this property. This is one I bought for $515. Their value jumped from $477 to $687. $209,000 increase. Taxes jumped to $5,000. That property I'm actually selling. It's a property that used to have a church in it, and then we tried to convert it to residential apartments, but the city wanted us to bring 2 shares of water, and make fire sprinkler systems. Basically, they want us to add $200,000 of cost before we started repairs. So I decided to sell that property instead of lose money. This next one is the complex, everybody's favorite property with lots of evictions of tires and fun stuff. That jumped from $649 to $888, $240,000 increase. Taxes are now $5,000 a year. Again, that's less than market value now, but at the time they assessed this property, I paid $550 for it. It was a mess. It was a dump. I don't know how they came up with that value. That's interesting. All right, the next one is the Ocho, another favorite property with tons of evictions and fun and drama. That went from $886 to $1.2 million, a $313,000 increase. Taxes are now $6870 on it. Again, that's really low compared to the value based on commercial. If that was commercial, it'd be like $20,000 in taxes or more probably. But again, it had some issues, but I can't complain about that value too much because it's probably lower. I know it's lower than what it's actually worth. This is my personal house, which is one of the crazier ones too, and I have a video of this on YouTube as well if you ever want to see that. It went from $703 to $1,029,000. Is it worth $1 million? I don't know if I could sell it for that much. Maybe. It's tricky. Our area kind of caps out at $1 million. My taxes went up to $58.96 a year. Again, thankfully it's residential, an increase of $1,600 a year. But that's a $326,000 increase. And the thing is, I paid $560 for this house in 2014, which was a pretty good deal back then. It's gone up in value, but it's not like it was flat for 8 years and then shot up like that in 1 year, like they're kind of saying it did. It gradually increased, and there's a little bit more of an increase here the last couple of years. But there's no way to increase $326,000 in 2 years. And that's what's shocking a lot of people in the area that have houses is like, they're used to the valuations being too low. And now all of a sudden, not only did the actual value of the house increase a bunch, but it's like the county decided we're going to get closer to that market value too. So instead of being lower, here's real value, here's low value, and here's the county. Now it's kind of like, oh, we're going to catch up, and maybe we'll go even higher than real value on some of these. And it's been very shocking to people. So that's why a lot of people have asked me to make this and discuss the taxes, because it's not just the fact that prices went up so high. It's that it seems like the valuations of the assessor went up even higher than the prices did. All right. This is the bar, which we may have news on too. It went from $102,000 to $273,000, a $170,000 increase. So that's $2,300 increase in taxes per year. The bar was not a good investment, I can tell you that right now. This is the store, which was a good investment. I have a liquor store and mini mart. Went from $220,000 to $540,000, a $319,000 increase, which is $2,800 a year. Again, it's so hard for me to complain about that because it never should have been valued that low. That's so low. I paid $600,000 for it, in that range. And so it's closer to value, but it's just these huge jumps, and they don't always seem to be based on purchase price or anything, because some of these other huge jumps were way more than what the purchase price was. And the second to largest, biggest jump in taxes was this is a commercial furniture repair store. I rented them. I bought it for $110,000, one of my first rentals back in 2017. It went from $235,000 to $398,000, a $162,000 increase, which is an increase of $3,000 a year. It now has taxes almost $10,000 a year, and it'd be tough to sell that for $400,000. Maybe. I think it's rented for $1,800 a month now. That'd be really, really tough. So that seems high as well. And finally, this is the building I'm in right now. The strip mall is 68,000 square feet, has a grocery store, has a dance studio, has a restaurant. it went from 2.7 million to 3.4 million. Difference of 661,000. Our taxes were almost 70,000 a year. Now they're going to 82,000 a year, a 12,500 increase. Again, the property's worth way more than that. But typically in the past, they valued them low. And that's a big jump. And the thing with the commercial properties too is a lot of tenants are on triple net leases. This building is a triple net lease, which means the tenants pay the property taxes, insurance, and a lot of the costs that go with those properties. So when taxes have this huge bump, the tenants can be in for a massive shock when all of a sudden their rent or their triple net costs go up $200 or $300 a month, or who knows what it is. We try not to do that to tenants because it can be shocking, and work with them and figure out different ways to do it. But a lot of tenants get priced out of their business because taxes increase so much. And like I said, if we could have this more gradual increase, I think it'd be a lot easier for people to swallow, a lot easier to handle than these just huge jumps that seem to have incurred this last round of assessed values. And I don't remember seeing the assessed values jump this high in the past. And yes, we've had high prices, or prices rise fast in the past too. It just seems like they really overdid it this time. So overall, I told you I'd tell you. My properties were assessed at $12,363,000. These are just my rentals, and I have a few more flips and a few more properties I didn't include in this because I'm selling those right away. And my new assessed value is $16,862,000. That is an increase of $4,499,462. So according to the county, in the last 2 years, my properties went up $4.5 million in value. Don't know how much they really went up. I haven't really checked on that, but I doubt it was, maybe. But yeah, I don't know. So the taxes before were $183,000 a year, and now they're $213,000 a year, or an increase of $30,000 a year. Now, some of those get paid by tenants on triple net leases, but most of those are taxes that will eat directly into my bottom line, because most of these leases and properties are not triple net. I pay the property taxes, I pay the insurance, and we charge them rent. So do you increase rents? Do you sell properties? That's some things to consider now with the big difference in taxes. I talked to another investor today who was complaining to me about the tax increase on some of his property and said, I'm so mad at the government right now, I kind of want to just sell everything and go somewhere else. And I know there's a few people who feel that way and have actually done that already. I'm not to that point yet, but this is it's just a little crazy how they did this. I definitely will be challenging some of these. Hopefully I can get them to decrease some. But really, it's the commercial ones that hurt the most. And when those increase a bunch, you can see some big increases, $3,000 increase in taxes a year on a property that's worth maybe $400,000. And like I said, I think we get $1,800 a month in rent. So $3,162 divided by 12. An increase of $263 a month in property taxes. And that is 15% of the rent, right? 15% of the rent. That's a big increase. That's not total taxes. That's just the increase. In total, with $9,000 and $94.84. I really don't like that one. $790 a month in taxes is what I pay on that. 43% of the rent will go to taxes now. And that's not a triple net property. So that is not a very good investment based on that, is it? So I wonder if the county considers that, if the assessor considers that, it makes it real hard for any commercial property to be a good investment or to make any money or to be worth buying ever if your taxes are that high and they value properties at what they're supposed to be valued at, right? If you value a property at $400,000, if it's really worth $400,000 and your taxes are $800 a month, it's going to be really hard to ever get rent high enough to pay for that property unless you're doing like a triple net and just charging all of those taxes to the tenant, and tenants just have to get used to paying way more rent, way more expenses on these properties, because that is pretty crazy. That's all I've got for this video. If I do challenge these or try to get my taxes lower, I will update that and let you know how it works. And what I do, I have actually never done that. I know, I believe my dad had did that before many, many years ago. I know other investors have challenged them. I've never personally done it because honestly, in the past, the values were never really close to market value, so I never saw the point in challenging them. Now, that has definitely changed. All right, love the likes, love the comments, love the shares. Love to hear what you're seeing in your area, whether it's in Colorado or another state. I know other states have way crazier taxes, but Colorado has higher taxes on other sides of things too that make up for it. And now, looks like we're pushing up these income sources for the government again.